Friends, the bull market is in full throttle. Bitcoin is pushing $104,000, altseason is handing out crypto gems, and M2 liquidity is flooding the system. But keep this in mind, the market won't stay euphoric forever, and we might see a 30 to 50% correction in July. But you know what? That's not a threat. It's an opportunity to catch even more gains by December. Today, I'm revealing 5 killer signals that will help you spot when the market is overheating, so you can act like a pro before it's too late. On screen, charts, on-chain data, macro trends, your personal crypto navigation system through this bull run. Research is your best friend, so let's go. Friends, the Fear and Greed Index is like a market emotion thermometer, showing whether traders are greedy or scared. It's based on 5 metrics: volatility, trading volume, social media activity, Bitcoin dominance, and Google Trends. It ranges from 0, extreme fear, to 100, extreme greed. Right now in 2025, the index is around 74. The market's heating up, and alt season is gaining momentum. But remember May 2021? When the index hit 95, Bitcoin dropped 50%, and alts lost up to 60%. Why? Because greed fueled FOMO, and whales dumped. How to read it now? On screen you'll see the 2021 Fear and Greed chart. Notice that spike to 95 before the crash? If we soon see the index hit 90 to 95 again, it screams, the market is overheated. Where to track it? Check the index weekly. 80 plus is a red flag, 90 plus, brace for a pause. By the way, make sure to check out my Telegram channel. I can alert you about market shifts and breaking news way faster there. Link in the video description. Hit that subscribe button if you don't want to miss key updates. Now let's move on to the next metric, funding rates. These are the fees traders pay to hold leveraged futures positions, and they reflect the balance between longs and shorts. Low or green rates equals calm market. Orange or high rates equals too many longs, dump risk ahead. In May 2025, rates are still green. Alt season is rolling. But back in May 2021, when Binance and Bybit rates went orange, Bitcoin dumped 40% because over-leveraged positions got wiped out. How to read this? If funding rates turn orange and stay that way for 2 to 3 days, warning, the market's overheating, correction incoming. Pro tip, compare rates across Binance, OKX, and others. If they're all orange, sound the alarm. Next up, the Bitcoin plus USDT plus USDC dominance indicator. This tracks how much of the total crypto market is made up of Bitcoin and stablecoins. If Bitcoin dominance drops while USDT rises, that means investors are taking profits and retreating into stables. In May 2025, Bitcoin plus USDC dominance is testing resistance, just like before the 2021 alt season, and alts are surging. But in May 2021, USDT dominance spiked 155% in 10 days, and then the market dumped 50%. On screen, you'll see the weekly dominance chart. Look at that USDT spike before the crash. How to use it? Open TradingView and add metrics like USDT dominance or BTC dominance plus USDT dominance. If USDT dominance jumps 3 to 5% over 5 to 7 days and Bitcoin dominance drops below 50%, it signals that alt season is peaking, but fear is creeping in. Bonus tip, track USDT inflows to exchanges. If they rise sharply, brace for a correction. And one more killer on-chain metric, the Z-score, which compares market cap to realized cap, how much investors actually paid. A score of 0 to 1 means undervalued, 2 to 3 is bullish growth, and 6 to 7 plus means overvaluation. In May 2025, Bitcoin's Z-score is around 2.5, bullish zone. But in 2021, when it hit 7, Bitcoin dropped 50%, overheated market. If Z-score nears 6 to 7 again soon, that's your warning. Alts are flying, but correction is close. Pro tip, compare MVRV with RSI. If RSI greater than 80 and Z-score greater than 6, high dump risk. Track it weekly. This is your on-chain compass. Google Trends and on-chain volume, these are your spies tracking sentiment and whales. Google Trends shows searches for terms like crypto, or Bitcoin. In December 2024, search interest hit record highs and the market soared, but then dumped hard. In May 2025, searches for crypto are rising again, but we're not at peak levels yet. On-chain data tells a similar story. Trading volume on Binance is up 50% this week, while OTC desk balances are down 20%, according to Glassnode, meaning whales are buying. Back in 2021, when exchange volumes and Google searches spiked simultaneously, the market dumped 50%. On screen, Google Trends and an on-chain dashboard. See those peaks before the crash? How do you read this? Go to Google Trends and search for crypto over the past 90 days. Check volume on CoinGecko or Glassnode. If in July the crypto search trend spikes and Binance OKX volumes jump 50% plus, that's screaming. FOMO is at full blast and a correction is looming. Pro tip: watch BTC balances on exchanges. If they drop 10% in a week, whales are preparing to make a move. And you know what? I don't believe this is the end of the bull run. It feels more like a regrouping, the market catching its breath before the final push to insane new highs by the end of the year. Today I want to share what could push the market into this pause, what's buzzing around. No specific calls, just vibes and thoughts. The crypto market is like a surfer riding the waves of the global economy. Imagine this. Major players like central banks or governments pull their levers, and the ripple hits crypto. For example, when countries start printing money, it's like pouring gasoline into our bullish engine. But sometimes, someone hits the brakes, changes in policy, new regulations. That can make traders pause and think, is it time to lock in profits? Or it might be international moves, trade tactics, shifts in investor sentiment that add a layer of uncertainty. On screen, some abstract chart of economic sentiment. See those waves moving? This summer, something like this could shake the market. But it's just a pause, letting the bulls reload for that final sprint. The crypto market is like a living organism. It breathes in and out. We're in the inhale phase now. Alt season, euphoria, X's everywhere. But every bull market takes a breather to shake off weak hands and give whales a chance to reload at a discount. This summer could be that exhale. Prices might pull back, people panic, others take profits. And that's completely normal. It's like an athlete catching their breath before the final sprint. The market reorganizes, and those who stay cool grab the juiciest gains at the end of the year. So friends, a possible correction in summer isn't a crash, it's a regrouping. The market takes one step back to launch 5 steps forward. Macro trends, emotions, charts, cycles, all these things can shake us a bit, but they're just setting the stage for the wildest part of the bull run. Stay sharp, keep your finger on the pulse, and you'll be ready for Crypto Olympus by the end of the year. And that's it for today. Remember, these are just my thoughts on the market. Not financial advice. Always do your own research before investing. Thanks for watching. Subscribe, drop a like, and stay tuned for more coin breakdowns. See you soon.